Listening to KDKR, Decatur, Dallas, Fort Worth, and KYJC Commerce.
Portions of KDKR's daily programming do not necessarily reflect the views of the management or staff.
Prudent Money with Bob Brooks is sponsored by the Prudent Money Foundation on 91.3.
So we are in a bear market. Well, what now? Today we're going to take a look. Stay tuned for Prudent Money. Listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. I do have a line open if you'd like to call the main number, which is 1-877-913-5357 with your questions and or your comments. Lots of questions today. We're going to get to them. A lot of questions that I'm getting. And you can also send a question in to the website. A lot of people do that. You can go to prudentmoney.com, go to the Ask Bob section, and what you may not know is that I love to hear from you. I love to hear what's on your mind, and especially if I can help in any way, clear up some confusion, which I think there's a lot of confusion today. That's on the website, prudentmoney.com. 1-877-913-5357. Well, let's start out with the market today. Now, you got to realize, after yesterday's pretty steep decline, today we got a little bit of a decline, nothing like yesterday. But market is fixated on what happens tomorrow, which I'll get to that. But first, the numbers, the S&P 500. And when I talk about the S&P 500, just from an educational standpoint, S&P 500 is an index that measures the performance of 500 stocks. And I always, just as a form of reference, always use the S&P 500 when I'm talking about the stock market. You would think there would be just one index that's the stock market, but there's multiple indexes out there. The top three, of course, are the S&P 500, the Dow Jones Industrial Average, and the NASDAQ. The NASDAQ dealing with technology stocks and those types of high-flying, more aggressive type stocks. Dow Jones Industrial Average is the oldest one, I think dating back to I don't want to lie to you, but I think it's 1884, something like that, but it was in the 1800s. That old, believe it or not. And I look at the Dow Jones Industrial Average, and to me, even though it really pretty much follows what the S&P 500 does, I always think the S&P 500 is a little bit more indicative of what the stock market looks like today. So the S&P 500 was down. Oops, wait a minute. Hang on. Phone's not working correctly there. 14 points to finish at 0.37%. It's a little less than 0.5%. Dow Jones Industrial Average was down actually 0.5%. And my phone's not working for me today. Anyway, it was down. Not much, but down day to day. NASDAQ was up a little bit, 0.18%. And like I said, everybody in Wall Street is looking at the Federal Reserve Board tomorrow. The Fed, which is short for the Federal Reserve Board, is going to increase the benchmark for interest rates. Let me explain what that means. Just follow along with me because it's not that difficult to understand. The federal funds rate is what banks, credit card companies, anybody who lends money looks at. If they raise the federal funds rate, that means it says to the rest of the marketplace, interest rates should go up. Now, if they raise the federal funds rate at 1%, that's a lot. And there's a little bit of a rumor going around that they might do that. I could see them doing that. Probably, though, 0.75% to 0.5%. And then there's what the Fed will say as its message to the market. If we get a market-friendly message, then the market just might have a huge update today. A huge day tomorrow. But it really comes down to, is the Federal Reserve Board going to be market-friendly, or are they going to be a hindrance? They've been market-friendly since 2009 up until this year, really up until about midway through last year. By the way, the S&P 500 has wiped out every bit of gain of last year and did so in 6 months. Well, 6.5 months, we'll say. Almost 6.5 months. That's why you want to take bear markets seriously. So it really comes down to the tone of the message and how the market's going to react. Now, I got to tell you, for whatever reason, for a very, very long time, I've studied bear markets, how they work, what happens, and consider myself pretty well versed on it. And what I look at today, and incidentally, based on history, this particular bear market, and even though the Dow Jones Industrial Average is not considered to be in a bear market, just the S&P 500 and the NASDAQ. Once again, I consider the S&P 500 the stock market, so I say the stock market's in a bear market. The Dow Jones Industrial Average is close. But this particular market is interesting in how it's forming and the length of time it's taking, which leads me to a conclusion which I'll discuss with you in a second. The problem is that, and this is just my opinion, you have so much misinformation that people are looking to through the media, through Wall Street, because you got to remember, Wall Street's got its own agendas. The media regurgitates everything that they're told. So the media acts as a mouthpiece for politics. I'll tell you something you don't already know, just reminding you. Politicians, people on Wall Street, they just regurgitate what they hear. They talk about bear markets as if bear markets are not a big deal. Well, they very well may turn out to not be a big deal. But then again, when they do turn out to be a big deal, it's something you want to be prepared for. So one of the things that I've done, because I talked about this yesterday, that the biggest problem for investors today is understanding what is being told to them about how all this works. That's why I titled today's program, We're in a Bear Market, Now What? Well, the now what's the problem? Because you're not getting information in a relatable form to where you can understand it and you can take action. So what I've done, we did this literally doing this the last moment. We're doing a 30-minute webinar entitled, You don't have to lose money in a bear market. And I'm going to talk about, in 30 minutes, I'm going to keep it very straightforward. And what I want to suggest is that if you walk away with even understanding 2 of the 3 things I'm going to talk about, you're going to be so much further ahead and be able to make much better decisions. One of the things that I want to make sure that we are doing at Prudent Money is that we are there to help you get through these times. Now, this may just turn out to be a blip on the radar, and the market may take off tomorrow and never look back. Don't think that's going to happen. I do think that in the event that we have some rough times ahead of us, I want to make sure we're there for you. So we're kicking off with this particular webinar. I'm going to have a live Q&A at the end of the webinar, 30 minutes. Next week, June 22nd, June 23rd, June 24th. 10 o'clock in the morning on the 22nd, 11 o'clock in the morning on the 23rd, 12 o'clock in the morning, or 12 noon. You can have lunch with us on our webinar on the 24th. So go to the website at prudentmoney.com and sign up for whatever time works the best for you. I want to make sure and get this information out. I think giving multiple times, and people are a little bit more flexible today with the working at home schedule, so maybe we can make this work. I'll be getting out more information to you over the next 2 or 3 days. But June 22nd at 10 a.m., June 23rd at 11 a.m., and June 24th at noon. Go sign up at prudentmoney.com. It's very easy to find once you go to the website. 1-877-913-5357. This is Bob Brooks. Stick around. I'll be right back.
The Word for Today is excited to announce the new official online home for the ministry of Pastor Chuck Smith and Kay Smith, pastorchuck.org. At pastorchuck.org, you'll have instant access to thousands of hours of verse-by-verse teaching by Pastor Chuck Smith from Genesis through Revelation, and full access to special messages on subjects such as prophecy and much, much more. Also at pastorchuck.org, a full library of great teachings by Kay Smith, and a section where you can read some of Pastor Chuck's books online, all free of charge. So visit the new official online home of the Word for Today and the ministry of Pastor Chuck and Kay Smith, pastorchuck.org.
Have you ever studied the Old Testament book of Judges? Well, hop aboard the Bible bus with teacher Dr. J. Vernon McGee this week and learn valuable lessons for your life today. Lessons on how to walk with God, or perhaps, better put, the consequences of not walking with God. I'm Steve Schwetz, and I'll save a seat for you.
Listen daily, 6:30 p.m. on Bible School Radio 91.3.
The book of Esther teaches us how to be ready to be used by God. The book of Daniel shows us how to be ready for the unveiling of God's plan for the future. Pastor Greg Laurie helps us study both this week on A New Beginning. It's good insight for the times in which we live. Be sure to tune in for A New Beginning.
Weekday mornings at 7:30 on 91.3 KDKR.
Welcome back. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. 1-877-913-5357. That is the number to call, and I would love to hear from you. I had an interesting conversation with my son, who's 20, and he does DoorDash in the evenings to make some extra money. He's in school, and he told me that he went to a taco place delivering an order that he delivers maybe a couple times a week. And generally speaking, that order will cost $18 to the customer he's delivering it to. He said he went to this particular restaurant last night, and it was not $18, not $19, but $22. I just find that unbelievable. A $4 increase, a little over 20% of an increase. That's just, man, if that's where things are heading, that's not good. That's one of the things that we talked about yesterday. Is the concern is that so many restaurants, man, probably not restaurants. Restaurants have already really raised their prices, and apparently they're still doing it. But they also had different reasons because of the pandemic and trying to stay in business. But so many companies have not raised, they've just resisted as long as they can. I think we're starting to see prices go up. That's the dangerous thing about inflation, is that this is just not your mom and pop typical inflationary environment. This is an inflationary environment that's unlike anything that we've seen. I mean, I don't feel like I'm sensationalizing that. I really cannot think of a time where we're getting hit on both sides. And to boot, the inflation rate that the government says, you'd have a hard time convincing me that that's accurate. And I use my example that I use every time. Those of us who eat, which is all of us, have to go to the grocery store. And I don't know about you, I shop at a pretty conservative grocery store as far as pricing goes. And I know that I'm paying 20-25% more at least in grocery costs. So you're getting hit by food and you're getting hit by gas. And I always felt like when when the first inflationary issues started coming out, the inflation story started to build, I was almost on the fence that yes, this is going to be transitory, a temporary type deal. Now, when I said transitory, I meant by this time we'd start seeing it subside. That was until the whole thing with Russia and the Ukraine happened and gas prices started climbing. The price of oil started climbing. When that started to happen, that's when I was concerned we've got something much, much bigger on our hands. So we got the impact of gas, we got the impact of food prices. Then we've got all of these supply chain issues. The best way to describe that is they're responsible for the parts that build the end product. Like chips, computer chips for new cars. Big shortage on computer chips. And it's really screwed up the car business. So we're getting hit by literal supply and demand issues, which is classic inflationary symptoms of a bigger problem. So you have used cars costing more than new cars. It's just the train is falling off the rails, it seems like, doesn't it? 1-877-913-5357. So today I wrote a piece on, and this is what I'm going to be doing. I've for the longest time have wanted to write a pure investment book. But I think what I'm going to do is I'm going to start writing it through blogs. And so you'll know that at any time you want to get caught up on what's happening, all you have to do is go to the website at prudentmoney.com and read, or better yet, sign up for the Prudent Money e-letter and stay informed that way. And I promise that I'm going to start posting more. Haven't been posting as much, a couple times a week, but I'll be trying to post more because I think it's important to get this information out, get you up the curve on what you need to be considering and what you need to be doing. So that's all going to be happening at prudentmoney.com. But today I posted something because I've been studying all the articles that have come out about bear markets. And what I'm trying to do is deliver the right message to you. Not the one that Pop Culture Finance wants you to believe is the right answer. And of course, that's my opinion. That's their opinion. We'll see. My opinion is based, I feel like, on research and many hours of research. And so what I've done is I've taken bear markets and broke it down into 5 different forms of a bear market. So if you get a chance, go and read that. And I think that will help you start with some clarity. We'll be covering a little bit of that in the webinar that once again is next week. This is the spur of the moment, last minute deal. June 22nd at 10 a.m. in the morning, June 23rd at 11 a.m. in the morning, June 24th, noon. So hopefully you have some flexibility that you can catch one of those three times. 1-877-913-5357. I wanted to cover a couple questions that I have been receiving. It says, Dear Bob, I've heard where money markets might fail. What are your thoughts? There's always that, the thing with money markets, that's where you keep cash, money markets and savings accounts, but money markets in particularly. If you have $10 in a money market account, you have 10 shares, and those 10 shares are worth $1 a piece. And the 10 shares are never supposed to go below $1. If they go below $1 a share, it's called break the buck. The money supply system in the United States is enormously important. And this did actually happen during the financial crisis, but there was for different reasons that I just don't think that you're going to see this time around. But if that were to happen, the federal government, even though it's with monopoly money, I think will backstop the money market accounts. In fact, they already have with government bonds, which is a long story. But anyway, I don't think that that's an issue. I think that's another one of those issues that's really overblown and nothing to worry about. You got to remember that you're going to be getting emails with all kinds of predictions, people trying to sell you stuff, trying to take advantage of the uncertainty and the fear that's out there. Keep that in mind. Keep this in mind. IRS expert Dan Pilla. I'm going to have him on the program tomorrow. I've known him for a little over 20 years, and we've been doing radio together ever since. He's one of the foremost experts on the IRS. And I've never seen him on a video just about lose his mind like I did a couple weeks ago when he posted the story of the IRS shredding documents. Yes, you heard this right. Your documents could have been in that shred pile. Shredded documents to get caught up. So tomorrow, going to have Dan on the program, and he will probably lose his mind on the program because he just He's got real strong opinions about it. We'll leave it at that. But hey, make sure I'll be talking a lot about this because we're doing this the last minute. Make sure you go sign up for the 30-minute webinar about making that you don't have to lose money in a bear market. Everything that you need to know, very relatable. I promise. You'll leave happy that you took the time. It's on June 22nd at 10 a.m., June 23rd at 11 a.m., and June 24th, 12 a.m. All three times will be a live Q&A. Hey, this is Bob Brooks. You got a question for me? Please go to the website at prudentmoney.com and send it in because we are all out of time till we do meet again next time. Keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.